Hello everybody. We wish you all a happy Vietnamese New Year of the Tiger. Chúc mừng năm mới. Like most markets around the globe, Vietnam also corrected in the months of January. Falling share prices were registered in all sectors, but the hardest hit stocks were previously high-flying smaller companies, especially in the real estate sector. The expected Fed tightening certainly did not help, but it was mainly local market events which led to profit taking from local investors. The index lost minus 1.3% in January, just before the one-week Tet holiday, the Chinese New Year holiday, which starts on the 31st of January. Mid and small caps corrected, and the months ended down minus 9.3% and minus 14.8% respectively. Our portfolio also corrected with mainly lower share prices and was down 2.6% in the months of January, according to internal estimates. Hi, my name is Andreas Vogelsanger and I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. January saw a strong reversal in speculative stocks, especially in small caps, after signs of a general market correction had shown up already in December 2021. Mainly real estate stocks continued to rise against the rest of the market in early January. But when these stocks suddenly experienced a reversal, they dragged down the rest of the market with them. Vietnamese investors who favored the speculative real estate sector lately ignored all signs of fundamental overvaluation, as many of them so-called F0, which means new unexperienced investors, simply followed the herd, which is driven by social media punters nowadays. With this sharp correction, a lot of hot air was removed from the market, and not completely unexpected, before the most important holiday week, which is called Tet or Chinese New Year. The stock market activity, however, is still strong, with average volume at more than $1.2 billion, while foreign trading is now more balanced overall, also with very little impact. We think once the current market correction is over, we expect investors to focus again on fundamentals, especially with the current release of Q4 and year-end results. How cheap the market really is compared to others in the region is, for example, when you look at the forward PE ratios of 2021, where Vietnam really is quite inexpensive with 13.9 times forward PE ratios for 2021, compared to the US, which is 19.7 times, or Thailand, which is 17.4 times. Emerging markets in Southeast Asia are becoming increasingly undervalued compared to the rest of the world, and they certainly offer a higher reopening potential as general life there is just starting to normalize again. A big event is certainly the huge economic stimulus package which the Vietnamese Assembly just has been approved on the 11th of January 2022. This package is around $15.2 billion, which is equivalent to 4.1% of GDP. Some of the items which are included are, for example, a VAT cut of 2% as of February 2022. So VAT will go down from 10% to 8%. Then investments in, for example, healthcare, social security, labor and employment, enterprise and household business recovery. So this is mainly an interest rate cut of 2% for selected entities. And then infrastructure developments in, for example, the Ho Chi Minh Airport, the North-South Highway, the metros in Ho Chi Minh and Hanoi. So just to give you an idea, so 11% is around interest rate subsidies, then 15% goes to social security and employment, 70% 17% goes to healthcare, 19% goes to tax cuts, and 33% will be in infrastructure and development. Obviously, this economic stimulus package is vital for the Vietnamese economy in 2022, but also next year in 2023. Mainly construction and consumptions are expected to be the key beneficiaries of this package. With the support of the Vietnamese National Assembly, they set a much higher target for the economic growth in 2022 as well, thanks to that package. And we are expecting GDP growth of around 6 to 6.5%. And ADB, for example, the Asian Development Bank, is also aligned and thinks and forecasts the GDP in 2022 will be around 6.5%. With a very high vaccination rate in Vietnam of around 80% for the whole country and 99% for big cities such as Ho Chi Minh and Hanoi, the country is expected to operate normally again very soon. The government also loosened travel restrictions, which provided an important boost to the air travel industry and hotels. Only 3 months ago, a negative COVID-19 test was required before you were able to fly. Now a proof of being fully vaccinated is already sufficient. So when you look at the airports now in Ho Chi Minh, they are busy again and bustling, it's full of people. And so is the famous Backpacker Street, Vu Vien Street in Ho Chi Minh City, which is full of people. With the Chinese New Year festivities, or Tet, how it's called in Vietnam, February will be a short trading month, given that the first trading day will be on the 7th of February. Despite an ongoing normalization in many parts of Vietnam, we expect a further back to normality developments after the Tet holiday or the Chinese New Year, when workers will return for work to factories and industrial hubs in the north and south of Vietnam.